Okay, perfect. All right. Hey, traders, thanks for coming on board this morning for a short video on the triple focus. We're just going to talk about the divergence aspect of it. It's a multi-purpose tool. We use it. It can be used to determine your intraday bias, what I call the layer one or the reason. But another use, one of the things we do every day is we take divergence trades off of it. So that's what we're going to talk about today. So let's go ahead and get started. All right, here's the disclaimer. Again, I'm not a financial advisor. You should question everything I say. You can lose a lot of money trading futures, and past performance is no guarantee of the future returns, whatever how that saying goes. All right, I'm not going to deliberate over this. You see this every Wednesday. It's the cornerstone of how we develop our programs, how we measure our performance, check our metrics, and make modular corrections inside of our trading model. There's three layers. The bias is the layer one, the bias model. The timing windows are layer twos, and then all of our categorized setups are layer threes. And all those work together in synchronicity. Again, I'm not going to go through this. You see this one all the time, but this is the framework in action, the reason, when, and how, layer one, two, and three. And today we're going to talk about the counter trend model inside of the reason, when, and how framework. So let's dive right in. Let me move that out of the way. Didn't even know that was up there. All right, so inside the reason, when, and how build out our framework, we're going to look at the divergence. And this example is going to be a bullish divergence. So three layers. And for the triple focus, you can see it in the chart below. And then we just have a NASDAQ Ninzarenko 36.6 bar setting on the chart. So in layer one, what we're always looking for is a reason to look long or short. So for the triple focus, the reason is when the first triple focus probe below the threshold occurs, it starts to clock and it sets the low pivot. So here you can see, I've got my camera in the way, but right there was the low mark in the triple focus, and it coincided with, this is where the clock starts. So that low is what we measure. Now we're just looking for a lower price and a higher low in the indicator. So we don't get that setup. So we have a reason to be looking for a bullish trade back here. Now what we need is when to start looking for a setup. The when starts immediately when we get lower prices and a higher low forming. So that little leg forms that. Now we have layer one, layer two, the reason, and when. And then we just wait for the A plus setup. It'll either be the jiggle, the reverse mullet, or the 108, predominantly inside of the triple focus divergence trade. Those continually dominate that setup. Very seldom do we get a puncture trade out of a divergence. So, it's dominated by jiggles, reverse mullets, and 108s in that order. But this is the simplicity of the setup. Clock starts on the first low, and the threshold is set at -60 and +60 inside of the NASDAQ on the 36.6 time frame. So anytime that you would use this and change symbols or bar types or different aggregation periods, the thresholds have to be readjusted. And I have a guide for the other markets, but we specialize in the NASDAQ. I can only specialize, honestly, in intraday scalping in one set. And it's all you need. It's all I need. I can't say what all you need is, but it's all I need to hit my objectives in my own personal trading. So anyway, that's the lay of the land there. So that's how the three layers work inside of the triple focus divergence trade. And we just look for those, throughout the day. All right, so let's take a look now and see if did I load a bearish one? Yeah. So here's the bearish. Now you can see here, this is a good one to talk through. Clock started here. We made higher high, lower high there, but we never got a continuation to the downside. So we just keep rolling it forward. We make another high here, and we get the first pullback into the trade setup right there off of this divergence. So this setup here is, again, first triple focus probe above the threshold, which is above the -60. That starts the clock. That gives you the reason. When is once you make the higher high in price, the lower high in the divergence, and then you grab the setup, and that's the how. First bearish A plus setup. Again, that looks kind of like a jiggle right there, but it'd be a jiggle or a reverse mullet. Okay, so that's the divergence trade. Now let's just take a look. Now that you know the rules of what sets it up, it can get fairly complex. This is the basic math model, but there's also calculus applied to this too. You don't have to trade the calculus effects. You can just take the easy visuals that you see. And let's just take a look at today's. And there's no better way to do it than to look at how the market acted today with the triple focus. Let's just back it up. Oh, what did I do there? Sorry, give me just a second here. Get that chart back up. There we go. Now we're going to start at, let's take a look right here. This is pretty clear, pretty clean. We're just going to look at one example each. Here's a bearish divergence. So I'll draw the line. Easy to see. Clock started here. What we're looking for is, so that's the reason. Now we're looking for the when. As soon as we make the higher probe and the drop and the lower high here, that gives us the when. So we've got our first two layers in our framework. Now we're just looking for the A plus setup. So if one of these two didn't fire, I'm looking at my chart. That's a jiggle right there. So that's the first setup in the sequence. So that would be it right there. So that's your how. Okay, so again, pretty simple to see. Now let's take a look at this. Let's follow this. Clock starts here. I'm going to talk about resets and how these things remain active. That's the last thing we'll talk about. But you see, we cycled from an extreme threshold reading down to a lower threshold reading. So this was a high threshold break. This was a low threshold break. All right. That starts the clock there. So what we're looking for now is lower prices and a higher focus, triple focus. We got it there, but we never got the pullback. Instead, we didn't get any jiggles to the upside. It just went straight down, created another low. Now, our triple focus indicator, you can see here, there's actual, Richard coded this thing so that it actually prints the digits. And this is really, really helpful because it's math. I mean, we can see where these low pivots are and determine if they're higher or lower than the previous pivot. That's really neat about this. So anyway, we take the lows out, but we make a lower low here. So clock starts again. We come up, back down, make a lower low, clock starts again right there. Now we come back up. This is not a trade because we haven't gotten a lower low in price yet. Now we have a lower low in price, and we have a higher low right there in the indicator. So rally up, we come down. That happens. That is one of the exceptions that I said very seldom happens. It's a puncture trade, but the puncture trade fired right there. So that's the first A plus setup coming out of that low. Now, you can continue. Let's talk about the resets. The reset is when you probe through the upper threshold and you probe through lower threshold. That's the reset right there. So that you can look for bearish divergences as long as you don't get a puncture at the lower threshold level. I mean, these things can go on for hours and hours. Opportunities, it didn't here in this case, but the minute this probes lower, you're not looking for the bearish setup anymore. Hope that makes sense. But now, until we probe higher, above the higher threshold, we can take bullish divergences all day long. So you can see here, we're looking for, it doesn't press higher, so we're still looking for lower prices, a higher low, and we get it over here. And then first setup is right there. I'm looking at my chart. That's a jiggle right there. So that's your setup. That's it. That's all there is to it. The basic divergence. And you can see we haven't probed higher yet, so you can still be looking for divergence trades. Here's one right here that played out. Again, you'd had to have been playing the 100-tick stop loss, but that one worked out as well. But you can see it just keeps going and going until you probe the higher threshold, and then it stops you from looking for these bullish divergences. I hope that makes sense. Anybody have any questions? It's a it's a really good tool to use inside of our framework. You know, it's one of those timing window things because it tells you exactly, it breaks everything down for you in one setup. It gives you the layer one, the reason to be looking a certain direction, and that's when the clock starts. Like we described earlier, when the first probe under or over the threshold occurs. Uh, it tells you when to look for a setup the minute you get the second criteria met, which is depending on what you're if you're bullish or bearish. The second part of the criteria for the bearish is the higher prices, lower triple focus. That's the win. And then the how is just one of our categorized pullbacks. So that's it. We use it every day. I certainly do, and I know several of the other traders in the room use it. So if you have any questions about it, let me know. Just hit me up, DM me, whatever, and we'll go from there. So we're right on time here. It's just if you're new to the room and you're not part of us and you're interested, here are ways to participate with us. You can purchase our tool set. It's everything minus the timing windows. Or you can subscribe and get all of this here to include the timing windows. Discounts are below. Coming soon, 7-day trial. One of the things we're doing is we're going to give away 2 indicator packages, everything minus the timing windows. So if you're new, if you do not have access to all of our tools, or if you don't own them, if you're just watching this for the first time, go ahead and register, and we'll give away 2 packages on August the 7th. So this is the where you sign up at. And please don't sign up if you're already a subscriber in the room or you purchased the packages. It won't do you any good. You already have access to everything. And this is how to get in touch with us. Sign up at patreon.com, A+ setup. Hey, thanks for taking time to watch this video. If you're watching it live, if you're watching it in recording, watching it on YouTube, just let me know if you have any questions. As always, let me know if we can help, and good luck in your trading. Have a good one.